How you doing, everybody? It's me, Trader Max from Shogun and Just a Lotto Crash Course. We are here to talk about something, and we're looking on September 5th, 2025. And I'm going to talk to you guys about something that maybe some of you knew and maybe some of you didn't. But today is the first Friday of the month, and we're going to be talking about something called the NFP. That's right, NFP. That's the non-farm payroll. It happens every first Friday of the month. It also happens with its friends from the Unemployment Center and some other rate information that you're going to find out just about today. I'm here to help you find out why there was so much volatility in the market today and how you can kind of play with that a little bit as well. All right, let's get started. All right, well, first things first, the non-farm payroll. Where can you find out information about it and when does it release? And let me give you all the great details here about our friends, but let's jump over to investing.com. Now, why investing.com? Well, investing.com has a economic calendar system on it that by far is one of the most simplistic, free, beautiful little things. It's like Canva for investing, which I really appreciate because it has a lot of information. Now, if you're into Forex, great. You'll have a lot of information here, but we're looking for U.S. news, not just U.S. news. There are other news agencies around the world that do have information that fires off. But the first Friday of every month, just about the first Friday, the only time there's ever a change unless the first Friday is a holiday. July 4th this year was on a Friday, so they released it Thursday, so a little bit changed there. So the thing is about this is like you're going to scroll down to the time zone of 8:30. Now, if this is Eastern time for me, right? So yours might say 5:30 if you're in Pacific time, right? So, or wherever you are in the world, it's going to say whatever time it is for you at that time, okay? Because it's going to go by your clock on your computer. But it's the same time, same value. Now, let me teach you how to read this a little bit, okay? We're not going to be concerned so much about the hourly earnings, okay? And even the unemployment rate is still pretty good and doesn't really cause a lot of fluctuation to a degree, okay? The expectation value that you see, like sometimes you'll see that it's red or that it's green or what have you. The non-farm payroll itself is very important. Now, what does non-farm payroll mean? Well, this means that only within the exception of people that started in the farm area, people who pick or work fields or tractors or mechanics, things that are related to farm work. This is everybody else, that doesn't work with a farm, right? So that's why they call it the non-farm payroll, right? If it was all about farms, it'd be farm payrolls, right? And then what is the number for, right? Well, if we look up here on the process, the actual and the forecast and the previous is very powerful, right? So as things fire off, the previous was 79K. Right? They were expecting to have about 75K. They didn't realize that it was going to fire off at 22K. So this kind of creates, and it's in red, it's worse than expected. But what they were forecasting is about 75, and you'll see here that it only produced 22. So worse than expected. So as soon as this is released, of course, what happens to the market? Well, let's go over and find out what the hell happened with the market here. Now, it does yield a positive candle. Okay, let's jump down to the 30 minutes so you can see it exactly. All right, blah, 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 blah. Where did you go? Right here, right? It does have a good candle, but look at this. There's a lot of movement, 204 to 209. That's 5 points. That's $5 worth of trading happening in this one candle. So right around here, you're like, ain't doing nothing, drink your coffee, have fun. Now, you can try to speculate. Try to hedge, you could try to put it above, you could try to put it below, you could do whatever you want, right? But my suggestion is never to trade the actual 8:30. Wait for reaction, okay? Because you always know there's going to be pullback, and I'll show you why. And how do we know, and how do I look back into the world and find out? I'm going to show you that here in a second. But let's find out, when did the other non-farm payrolls find out? Because you don't want to, yes, you could go back through very first Friday, but how do you do that on this system, right? Well, there's two ways to do it. Here, you're going to come down to whatever one you want to do. Let's just use the non-farm payroll. We're going to click on it. And what this is going to do is going to bring you to the thing. Now, this is also going to tell you everything that it speculates. Super easy, right? From the Bureau of Labor Statistics, straight from the horse's mouth. No pun intended. Well, plenty of pun intended. Let's just be real. All right, but this is going to tell you every single day it's ever released. Now, there's the 22K. right? And they were thinking there was going to be more. This is why it's red. They were thinking it was going to be more. This is why it's red. This is why it's green, because they thought it was going to be this, but it turned out to be more. And we'll look back on these days to see what each one was. Now, why does this one say 9:30? Well, that's because it fired enough 30 Eastern Standard Time to EDT or EST. Okay, so you got to know which one's going to be which, right? So we can look back all the way to this time period, but let's go look on the chart now. And how do we see what it looks like on the chart? Okay. Now remember what today's look like. Look like this bad boy. Big giant candle, a little bit of push up, and then a big fighting candle, we should say. Right? Lots of stuff. This is a big, huge battle. I mean, that's 3 points worth of battle and bears and bulls and oh my, right? But it gets up to this point and it just drops like a stone. You know, people are like, all right, I got my money in and out. All right, I'm tired of this shit. You know, I'm not going to hold 210, right? And it didn't. It just let go. And you're going to see heavy volatility at like this after just about every single one of these. How do you know? Let's go check. Where do I do that? Well, drop down here to this little calendar right here. Now remember, your time zone is going to be a little bit different. Mine's for 8:30 EST. And remember what we said, right? When was the date, right? Today's September 5th. That's easy enough, right? Let's go back and check it out. August 1st. August 1st was the very first Friday. So let's go back over to there and see. Boom. August 1st, first Friday. Super simple. When do I need to know it again? Well, this is July 4th, remember. So July 4th, isn't it? July 3rd is, right? Super simple. Where's the first Friday? Right there, June 6th. Super simple. No holiday on June 7th, unless you're talking about somebody's birthday. No, my kids, not my birthday. But that's what we're doing, right? So we're going to jump back in. We're going to go to August 1st, and let's have a look. We're going to choose 8:30, and we're on a 30-minute chart here. We'll just hit go to. And boom, and there it is. Look familiar, right? Big, huge battle. Big, huge battle. Okay. Now, again, it may not be a lot. 170 down to 68, right? So it doesn't look like it's a huge battle, but by the looks of the market, it does look like a huge battle. And remember, it was red, right? It was a super huge red battle. 168 down to 165, another 3 points. So total now from where it incepted, we're talking 169, like it came all the way up and it came all the way down, and then had a return. Always does. Always does. Right? Now remember, that was a red day because, you know, it had a red day. Let's look what a positive day looks like. Let's go back to July 3rd. Super simple. Remember, jump down to the calendar, go back to the day. July 3rd. Well, that's July 4th, so that doesn't work. Let's go to July 3rd. Well, look at that. Same thing. Big giant candle. How much movement? 155 down to 151. Only 4 points, but still, that's a huge margin, especially at that level. Right? But what happens? Drops way down, recovers, drops back down, continues going back down, right? Knowing where these margins are and how they work, very powerful. But look at that. Let's go back to July 3rd or to August 1st again. I want to show you something. Come down here, pop, July 1st, go to, there it is. And I want you to see this particular line of movement. Before you start going speculating and try to pre-guess which way it's going to go and you're straddling up here and up here, if you wait for the straddle to happen, there's only a couple points. This sets your levels. Right there. This is temporary level. This is the 830 chart. Whatever this one does, sets sort of a level. Now what I want you to do as well, I want you to find the mean, which means the middle. Look at that. Look how powerful that is, right? This is the top, this is the bottom, this is the mean. And look at that. Super powerful. So this is going to give you some idea what you're to do, right? Comes down, bounces, comes down, bounces off. Once this one's set, this candle starts, where's it going to go? It's going to find ways. It's going to find ways to get bound to one here or here, okay? Let's do it again. Let's go back to the other one, July 3rd. Okay. Go to. Okay. Here's the top. Come on, Max. Let's go. There's the top. There the bottom. And there's the mean. Again, not to the dollar, but pretty dang close. And once you start to realize this, okay, you can start predicting and having usage for your support and resistance areas. Now, this doesn't even include some of your other stuff that you may have, right? This may not even have to do anything. That's a pretty good movement. What is that? That's 2% movement, right? 2% movement. That's happening. Okay? And you know within at least a couple of hours of it happening, it seems to have a drip down. Right? So let's go back to another one. Check it out. See, these are predictables because guess what? Always happens. It's something that you can see that there's movement. Right? Another big one. Look at this shit. You know, and again, it's not a lot of movement. 152 down to 150. This is only 2 points, but I want you to see the structure of how power structure works with support and resistance. Look at that. Look how powerful that is. Look how much information you have. Do you think this is just something made up? It's not. Right? Non-farm payroll. Again, 1.66%, 1.60%. That's not a lot. But do you need a lot? Right? Comes back in, touches the market, pull back. Yay. You know, if you want to capture these bigger movements after things come back, then great. Put yourself in a good little short, wait for a pullback, boom, as soon as it hits, right? You pull back in. Now here's what you do though. Because you don't want it to break, and since it rarely ever breaks above, you'll set your stop loss tight. And you'll leave your stuff open. And what you'll do is you'll trim down. As you're leaving, you'll set your stop losses shorter and shorter and shorter and shorter. Right? As it comes in and it breaks through value, you bring your stop loss next down to structure. Remember, we didn't do the mean here in this one. Watch this shit. This is really crazy. That's the mean right there. Look how powerful that is. Super powerful for you. It should really help you. Let's do one more. Let's go back to June. Let's go back to May. Where's May? May 2nd. Oh, boom. Now remember that this is a speculational system, and it happens. It doesn't happen 100% of the time. But what it does do, it does follow a very distinctive pattern. I'm going to show you here. And for the most part, it has a very predictive path. And again, May 2nd, let's go back over to here. Let's look back in May 2nd. We have positive numbers. Positive. Right? Better than it expected. Went up pretty well, you know. So, but these numbers aren't really going to set the direction of where things are going to go. But look how positive they are. 177. So it could mean that if they're looking at really high numbers, better than the forecast, not better than the previous month, so it's down, right? So what is it going to do to the market? It's going to have a negative presence over a period of time. You might get push in. I don't know what happened here. Just me for a second. Yep. Come down and go right to the mean. Now that's the one that gets scary for me. The mean, right? The middle. The mean's always mean. Look how powerful that is. Boom, pass, break, yes. Right? In this section of structure, where's structure now? It's not so much because it violated this a little. So if you did get into a sell, if this did come down, if you wanted to wait for it to drop down, where would you put your stop loss at? Now I'm not talking about your liquidation. I'm talking about your stop loss. Like say if it came down here and you didn't see all this other stuff, you know, maybe you would have gotten to a trade right here. I would have stayed above structure, the highest structure in this time period, right? Which wouldn't be a lot, right? How much would that be for you? I don't know, right? But I wanted at least a 1.5 to 2, right? 1.5 to 2 trade. Risk to reward. Might take some time to get there. You know, but again, the movement here is trying to find out where you're going to get the candle reversal. Doesn't happen every month, doesn't happen exactly. If it was, we'd all be rich, right? But I'm teaching you how to at least look at some of the prenuptials there. You know, maybe you didn't get into there, but you would stay around structure. Don't put it super tight here at that point. Wait for it to commit to structure. If it's already under structure, it's got places to move, right? If you're making trades here past this time, comes up, puts a production in, you put the structure in, you make that tight then. If it breaks out of structure. If it breaks out like this, if I make that as a process, I'm going to come in here, I'm going to do a long position. I'm going to say maybe I get in right here. Now, because I have structure, I'm going to tighten it. Right? Because I have structure that hasn't been broke, like this one hasn't been broken with this yet, I'm going to keep it tight. Right there. Probably put right here, maybe lose maybe $5 with the potential that I could get a long push. But using the NFT, the majority NFP, the majority of these usually drop down over the day. So what you're looking for is signals and systems on the way down. Production, commitment, right? And here's my biggest commitment right here. Now I know I'm cherry picking, right? Yay for me. I get that opportunity, right? But literally, I traded this all the time with derivatives where we had stop margins in and where we would put it at, okay? I could do something like to that effect right there, and I'm going to be okay, right? Because this is where I would have put the market right about there. And a risk-to-reward ratio of 1.28%, I still would have taken. Whether or not it would have gotten to that, or if I would have put it at 2, at one particular time, I'm going to end it for the day, okay? There's 1800 at 6 o'clock at night. Probably done for that for the day. So whatever this margin is to here, this is what I would make, 1.75, so not too bad. Right? But I'm waiting for something to happen. Okay? All right. So this is basically how we find you're going to head over to investing.com, you're going to look at the NFP, you're going to look at those times, how there are now the unemployment record, all that kind of good stuff, okay? These are all really big 3-star stuff. Employment rate, right? Super powerful. Another one of those things that they all happen on the same day, so there's a lot of work. They don't really counterbalance each other too much. The more negative news is mostly on the NFP, whether or not it's been expected or unexpected or underdelivered or overdelivered or what have you, okay? So the employment rate is a fluctuating thing, but it's been pretty strong here over the last, I don't know, since the beginning of the year kind of thing. It's starting to get stronger and stronger. You know, but the whole thing is that there is movement to the chart. There's movement to value here. You just learned some cool little trades, right? Cool little ways to do this. I want you to stay tuned. This has been about a 20-minute video right now, and I'm sorry, but you know, hopefully you're not tired of my voice yet. I hope you've learned some things. There are a lot of little tricks. I'm going to put out a whole series on Tradingview and indicators and news and all that kind of stuff to get you tools. Information is key. I'm Trader Max. We'll see you next time. And as always, trade well.